away from February, and now this last week that has just ended. We look at the equity market. The equity market, the Nigerian equity market rounded off the week on a negative note, losing 59 basis points on Friday and 285 basis points week on week, trimming the year-to-date returns to 9.7%. And drilling down to the sectoral performances, the banking sector shed some 835 basis points this week and ended as the biggest laggard for the week, as strong sell-offs plagued the sector through the week, despite impressive earnings releases from the banking stocks. In the consumer goods sector, despite gains in flour mills and Honeywell, that sector came in lower by 159 basis points, while the oil and gas sector followed with 164 basis points weakness, weighed on by declines in Seplat and ethanol oil. The industrial goods sector also closed lower. But surprisingly, the insurance sector came in higher, and about the only one that actually ended in green sectorally, with 0.25% week on week. And before we jump into our discussion, we'll take a look at the NASD-OTC representing the unquoted securities markets, where you have the CS and the likes. USI dropped 0.29%. Market capitalization moved against the 448.82 billion naira we had last week to 447.52 billion naira. Volume year-to-date, value and dues right there deals coming in at 550. Well, the total value for the year so far is 3.42 billion naira. CSCS was the top loser by 10.46% this week. And that, of course, shows the interest of investors, which is now waning on that side of the markets. Well, we said earlier that the Board of International Organization for Securities Commission, IOSCO, recently published its consultation report on mechanisms for mitigating extreme volatility in the market, and it's believed that extreme volatility in securities markets can undermine IOSCO's objective of ensuring that markets are fair, efficient, and transparent. Well, joining us to give us analysis on this evening is the General Manager, Business Development and Corporate Services at the CSCS, Mr. Joe Mekilowa. Good to have you on the program, sir.
Good evening.
Well, talk to us about this IOSCO report. What does it really imply for capital market operators?
Yeah, just like you mentioned, IOSCO primary objective is to ensure fairness, transparency, and efficiency in the marketplace. IOSCO has about 24 principles, ranging from DVP, delivery versus payment, risk management, legal basis for any action in the marketplace, account segregation, we have margining, and communication procedures. There are many like that.
Yeah.
And with those principles, each market will draw its rules and ensure that whatever rules in each market is in tandem with the IOSCO principle. And because of some happenings in the market, such as regional integration, multiple listings of securities across jurisdictions, IOSCO believe that there will be need to expand the principles.
Right.
That is, those things that may not have been captured within the 24 principles, there will be need to address them or to look into them. And that is the reason why the idea of setting up a committee or consultant to actually look at the market volatility.
Right. Which is the extreme volatility.
Extreme volatility.
But help us to understand the definition of IOSCO for extreme volatility. We know of volatility in markets. I mean, when you trade, when you buy and sell in any capital market, There's always volatility at some point in time, especially when it is not earnings season.
Yes.
And so what is the IOSCO's definition of extreme volatility in this case?
What they are trying to address is that we have rapid changes in the market. Mm-hmm. Volatility is in different areas. Great. One is information technology. Mm-hmm. Extreme changes in the area of how businesses are done in the marketplace. And that these changes should be looked into to ensure that it will not run counter to the objectives of IOSCO. For example, in their recommendation, one of them is that mechanisms should be put in place to ensure that when a security is listed in a jurisdiction, and the same security is also listed across jurisdictions, there is need for information symmetry. Okay. So that operators in one market will not be at a disadvantage by the reason of the fact that that security may have a primary place of listing, okay, and secondary places of listing.
So in light of this regional integration of markets that is
so there is need for information concerning that security to be made symmetry. So one of the principles or the recommendation is that,
because there are 8 of them, right?
Yeah, about 8 of them. Yeah, that there should be a mechanism by which communication should be made available across board.
Great. Well, this we have to get to understand much better when we come back from this break, because we're due for the break, actually. Okay. So when we come back from this break, we'll talk more about that and how it applies to regional integration as well as the